Good afternoon from TFNN. Welcome to the March 2nd magnificent Monday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Perseverance Rhodes, filling in for Tom for the afternoon. And here's the key, folks. Always remember, you always want to be pioneers of your free future versus prisoners of your past. If you can do that, well, that's one way to make sure that you have a magical Monday. Hope everyone out there has done that. Grateful to be with you. Our call-in number is 877-927-6648, internationally 727-445-1044. Again, my name's Steve Rhodes. I host the 9 to 11 o'clock series here at TFNN. If we're not on a radio station near you, can always get us on Tiger TV. So tune in, and let's go check out these markets out here. We had the Dow close up 156 points, closed out at 18,288. S&P up about 13, closing out at 221.17. Of course, the big story is the NASDAQ. NASDAQ closing out at 5,008. We're going to start off by taking a look at the NASDAQ. What does it mean? We'll take a look at it on multiple time frames out there. Russell 2000 was up 9 points. It closed out at 1242. Leaders to the upside of the market today, you had NXP Semiconductors, and that was up 15 bucks. That's on a merge or a buyout, along with I don't see the name of the other company up here. We had Google. Google's up nice today, 13 bucks. Volume so-so behind the move. Price line up 12 bucks. Visa was up 7. Biogen, BIIB up $6. To the downside, leading the charge was Pacira Pharmaceuticals off 22 bucks, down nearly 19%. Lumber Liquidators, which has been struggling for a long time, but I did not see the segment on 60 Minutes, but I've heard a bunch of talk on the media about that. They're down 25%, by the way, off 13 points, closing out at 38.83. You had Cormark Holdings down $6. Tesla was off $6. Icon Enterprises down $4.50. Gold right now trading out at $12.05. That's off $7. Likely to continue to head lower out there. Silver down 17 pennies, trading out at 16.38. Okay, so let's go take a look at the NASDAQ, see what the NASDAQ is doing. For those of you that have been listening to my radio show, you know the level that we have been looking at ever since the NASDAQ got into the price. Hopefully you're watching this on Tiger TV right now. Once the NASDAQ got above 43.55.69, that opened up the door for a test of the highs. Now, the highs that we're talking about are 51.32.52. The reason why I say that is because that's the low of the swing point from March of 2000. Whenever you close inside of a swing point, now this is a monthly chart that we're taking a look at, whenever you close inside a swing point, volume or not, price is likely going to go test. In this case here, if price is rising, the top of that swing point. If price was moving down, it's likely going to go test the bottom. Does it have to test it? No. But is it likely to? Are the odds? The odds are yes. And in the case of the composite out here, once it got above that level was tested. That's the blue horizontal line going across my screen. The red horizontal lines going across my screen. Those are referred to as horizontal trading ranges. These are kind of like equidistant price levels, horizontal price levels, where price typically finds support and or resistance. Remember the big sell-off that we had back here in October of 2014 when price came back during that sell-off, during the Ebola scare out there. Price got down to a level of 41.16. The horizontal trading range boundary line was 41.14. That line was developed many, many years ago out here. You're just basically taking those equal quadrants, your measurement out here that are traveling in between these horizontal levels of support and resistance, and they work really well. Well, if they work so well, what is ahead of us? What's ahead of us right now, and this is a monthly chart that we're looking at, is number 5,037, 5,036.95 to be exact. What we saw here today, intersession today, was 5,857. So what's likely going to happen? Well, first, if price closes above 5,036.95, remember, we're looking at a monthly chart out here. That bodes well for a move all the way up, beyond 5,500, but all the way up to 5,960. Now, we're going to take things one day at a time, one moment at a time. There's certainly nothing bearish out here as we take a look at the composite. Is price likely to go test and spike that 51.32.52 level? Yeah, I would say absolutely. Now, the horizontal trading ranges on a monthly chart are going to be different than a weekly chart, different than a daily chart. The reason is because I'm using the real essence of price. See, the essence of price is the actual body of the candle. Those wicks, those upper and lower shadows, all those are just simply the extremes. Those are what I like to call the temper tantrum of the actual trading session. Now, if we take a look at the weekly horizontal levels of support and resistance, I'll leave the monthly chart up on my screen out here. What we can see is on the weekly basis, and the numbers are going to be different here. On the weekly basis, the bottom, this 46.91 level, that's been busted through on a weekly basis. So this says if we get above the, first, I think ideally what you're going to see is at least a test that 51.32 level. All right. You're at 5,008. So it's another, 100 points, 120 some odd points, 24 points or so. I think it's even more likely that what you see is a run up to about the 55.41. Does this have to take place beginning right now, beginning tomorrow? No. Are there some problems out there? Well, you wouldn't see the problems if we just simply stuck around here and only took a look at the weekly and the monthly. So what we're going to do is we're going to switch over. We're going to take a look at the summation index for the NASDAQ composite. Now, what you're looking at, I hope that I'll explain this to you if you're just listening on your radio or maybe your mobile device at TFNN.mobi. And remember, you can catch the archive of this show. You can see this, or you can tune into my morning shows out there between 9 and 11. And it's Steve Rhodes. It's archived on Channel 9, archived on Channel 10 here at Tiger TV. Now what I've done is I've taken this chart that we're taking a look at, and the bottom, I've just exploded it up. The bottom is the price oscillator for the McClellan summation index calculations out there. Now, what I'm showing you inside of the NASDAQ composite. So now we're at all-time high. We're moving into the 2,000 levels, right? It's been moving up significantly. But, folks, there is trouble in River City. Now, it's not the kind of trouble where I want you to go out and take a short position in the markets. Instead, what I want you to really do is I want you to be preparing for taking the next long position in the markets. Right now, on a daily basis, there is an identification marker of some trouble. In the past, it has worked out this way. In the past, it is called significant bottoms when we've seen this type of divergence. What type of divergence, you say? Pretty simple. The type of divergence where the oscillator is heading down, this little red line that I've got, as we're taking a look at the bottom panel of my chart, with price rising higher. Every time that's happened, every time that's happened and sustained itself that way, what we've seen is some type of correction, some type of pullback in the market out here. And that's what I would expect, but only if we see this price oscillator dip below the zero line. We're nowhere near that. We need some kind of big reversal out there. Does that mean that this is a big top and you should go ahead and back up the truck and go short? Absolutely, positively, no. Do not do that. This market is going to continue to motor on higher. This market, if we go take a look, in fact, what I'll do for you is let's take a look at the other indices out here. Give me a moment. Just simply we'll change over and we'll take a look at the give me a moment here to do this. It's on a different page. Let's take a look at the S&P 500. So let's switch over to this. It's best to understand what's going on the longer term picture, in my opinion. If we take a look at the monthly chart here for the S&P 500, what you're going to notice is the S&P 500 had been traveling in a 16-year sideways consolidation. Those horizontal lines of support and resistance that we were taking a look at. Well, those are kind of like if you're driving home. Those are your larger thoroughfares that you're driving through. But there's this larger consolidation pattern that was in play. Hey, the NASDAQ had its consolidation pattern as well, but it broke out of it. It fulfilled that price objective. Now it's working on additional price objectives. If we take a look at the S&P 500, it broke out of this 16-year consolidation right back here. This is a monthly chart, by the way, that we're taking a look at it. It broke out the month of March in 2013. Yes, March of 2013. On a monthly basis, came back and tested that level. Well, when you break out of a sideways consolidation, your price projection is equal to or greater than that consolidation. So the price, when it broke above the consolidation, if you just simply take a look at the highs back in 2007, that was out at 1576. All you have to do is add 800 points to 1576, and that takes you to 2376. So the price projection inside the S&P 500, this doesn't mean it happens tomorrow. It doesn't mean it happens necessarily, even has to happen this year. But what it does mean, folks, is this has more work to do to the upside. So while everybody is focused on the NASDAQ and the composite out there, and yes, there are signs that the market is going to have some type of retracement. In fact, it's probably the kind of retracement. It's probably what takes place is where everybody's going to start. I don't know about everybody, but you'll start hearing, it'll be like, it'll be as if the market is over. The composite got to 5,000 and that was it. That ain't the story, folks. The S&P 500 wants to get to 2350, 2450. Then we'll take a look at what the market wants to do. This is Steve Rhodes. This is TFNN. We'll be right back, folks.